people should get educated before they reach out to anyone. At least know what are you applying for, what type of mortgages are there. It's very easy now with the ChatGPT. You can get all the details you need. Be sure that once you reach out to your loan officer or the real estate agent, you know what you're talking about. So there are some agents that they are, or loan officers, or anybody who does work, any work, they're really honest. They're looking after their clients. But there's some they just want to take advantage of it. So that's the big thing. Again, when I was buying the first house, you were referred to me by my best friend, AJ. So Fizari, I'm sure he's gonna watch this video. I'm not gonna tell him, so I want him to hear it out. So you came to me as a referral, and after now 5 years, we're talking again and all that. I got into industry, and again, don't get anything personal. No matter what business you are, if I'm working with my engineering business or construction or real estate agent, it's just a business. Maybe tomorrow you're gonna see that person and grab a coffee. You never know who you're next to. That's a very important lesson. Even there are people who hate realtors for no absolute reason.
Yeah.
I got my license to make my own money, right? To pay off for my kids' school or whatever. There is no reason to hate me, right? I understand that you had some previous bad experience, but if I give you a call, even if that's a cold call, talk to me or talk to other realtor as a person, answer questions, don't hang up the call, don't be a bad person, be a normal person. Where do you work right now? For which brokerage?
Actually, I am with FM Home Loans. We are headquartered in Brooklyn, New York, and I'm their only sales manager here. And we are acquiring a few actually buildings in DC that I would be catering for. So it is good. Yes. 99% of my clients are referral. So that's an extra pressure on me to do good because it's a referral. It came from somebody. So, and obviously I did something good with them. So that's why they referred me. So referrals tell us that how are we doing? Very, very straightforward.
I agree. But when you began this journey as a loan officer, you didn't have those you didn't have those referrals. Now there's so many people doing this stuff, doing my job, doing your job, right? So now it's people who are starting right now, they have to approach all these differently. There are different options. Like for me, in my case, I don't like being micromanaged, and I don't like having a boss over my head telling what to do. So I tried being a part of a team. It was a great team, but I just didn't get along. I just didn't like being micromanaged, right? I was always being self-employed and all that. But there are some people who they need that. They need to be micromanaged. What would you suggest? People who are now becoming loan officers, should they join the team or should they start on their own?
It all depends, because some people, like you said, they want somebody to watch them, tell them what to do, how to do. So it's good for them to just join a team. And if somebody like you and I, we have time management, we know how to do, what to do, when to do, then I think just go independent, because it's a huge cut with the team member. They just, I think, take 40%, and you do a lot of work, and then you just like pay first to the brokerage, then your team member. You got nothing, because the real estate market has changed. They're not getting 3% or 4%. It's hardly they're fighting for 2%, and it's a lot of work. So it all depends. If somebody is fine with themselves, getting people in, talking to people, getting their pipeline together, connecting with people, networking, they definitely go by themselves. But if somebody cannot do all this stuff and they want somebody to just send them the leads and everything, join a team, because it's a pros and cons for both.
Makes sense. I have 3 questions that are not really part of our initial plan, but I just want to go through. It just came up. First one is, you mentioned, and you know this, that you were working while the 2008 crash hit. I literally watched the movie The Big Short a couple of days ago, and the market actually fell down a couple of days ago because of that guy, Michael Burry, and all that story, right? So how was it? Was it really crazy? Like people were talking? Was it really scary?
In the start, it was scary good. And then when the market crashed, it was scary bad. Because I remember, and again, like I told you, and you were saying that a lot of loan officer or real estate agents push their clients to buy this stuff. And I really wasn't, I was telling my client not to buy this stuff at that time, 2008, with no income, no credit, nothing. And they're just buying not 1, 2, 3 houses. And I was telling them not to buy it. Eventually my manager said, Asma, they will buy it if you sell them or not, because they'll go somewhere else. So just help them. And I helped them. And it was scary when the underwriter was asking us, loan officer, to take the employment and take the income out. Just don't put anything there. And just do the loan. And so many loans that I was really think that it would not be approved, and they were getting approved, like literally approved. So we were making a lot of money. And at that time, I was doing both real estate and mortgages. And real estate, easily where we were getting paid 3 to 4%. And on mortgages before 2008, it was we can charge them upfront, front end and back end both. So I was making a lot of money, and everybody was doing it. And then it's not that I was pushing them. My clients were pushing me, and I was just doing it because I knew that if I wouldn't do it, they would go somewhere else. So after the 2008 crash, obviously all the houses that they bought with 0%, zero down, and not even zero down, a lot of time they were getting money back at the closing. Whatever they're putting, like an EMD, so they were getting back. So literally they did not put anything, 100% lenders or government or who's ever money. So after that, obviously the market crashed because everybody was involved in that. Inflation, appraisers were involved, underwriters, everybody. And most importantly, the people who were buying it. They knew that they cannot afford it, but they were buying it. So it's not 1% fault. And after that, I heard a lot of people saying, oh, I got my real estate agent didn't tell me, my loan officer didn't tell me. And I was telling them that's not true. I mean, most of the loan officers and real estate, and including myself, I was telling my clients not to buy those houses with those terms, interest-only payment, negative amortization, but they were not listening. So don't blame anybody. Even if if somebody would give me anything for free, but I would not take it because I know there's something attached with that. I would pay more. So I would not take it. I said, no, thank you. Nothing is free in this world. So we have to be careful.
There was a catch. But regulations are different now, much stricter than back then. People now are scared it's going to happen again. Based on my research, just the research experience, I think it's very hard to happen again.
Oh, yes. It would never happen again. I'm sorry to say that. And it's not just the research, it's the experience and the thing that we are seeing, because market is very different in 2008 and this time. Even a lot of people are saying, a lot of people are waiting for this crash to happen for last 3 years. And it did not happen, and it would not happen. What's the reason? It's very easy. And that at that time, people were putting 0% down. We were not checking their income. We were only checking the credit scores. That's it. But now people are putting easily 20 to 25% down. And even during the COVID, when the people were outbidding each other and putting $80,000, $90,000, they were putting that money out of their pocket. Lenders were not lending anything above the appraised value, and the appraiser were not appraising it over the value. So it's totally different market. Whatever people are doing, even if they're buying high prices, they are putting that money out of pocket. Lenders are not lending anything over the appraised value. And appraisers are not appraising it over the value. So it's very different market, and the market will not crash. Market already stabilized in our area, and in a lot of, like Florida was always a hot market, Arizona, California, New York, some chapters, they are all stabilized. It's the buyer's market, and except of seller's market now, but it's not that market is crashing, or market has crashed, or market will crash. It will not. I don't think so.
People are making their moves lately, mostly because of political reasons and red blue states. Okay, I'm seeing that a lot as well. But what do you think when you're talking now about political reasons? What do you think about this new thing that our president is saying about 50-year mortgage? And what do you think about that other type of the mortgage that I really kind of like what he said, that you can transfer your old home into a new home? Do you think that is possible? Would that work? 50-year mortgage, I don't really think that's really excessive for the primary buyers. For the investors, it may work. But this transfer mortgage, that I think it may work.
Yeah, but I don't think that could be feasible because the rates are high right now. And those are not assumable mortgages. Most of them are. So once you just refinance or you pay it off, it's gone. How can a lender would lend you in 7% or 6.5% or 6.25% market? They can lend you 3%. Where are they getting this money at that rate? They're not taking any losses. So if the government is subsidizing that, that's not good, because we are already in trillions of dollar debts. So, I mean, it's a good idea. 50 years, I wouldn't say it's bad, because instead of paying mortgage rental, I mean, people can, I mean, it would be like a rental house, but you're building equity. You're not paying off anything in the mortgage, because obviously it's 50 years. But at least they're building equity, and whatever they build equity, and they would sell it like 10, 15 years, they would at least cash out that money. So 50 years of mortgage, I wouldn't say bad, but I don't think the 3% moving forward or rounding up or rolling it up, I don't know how is it possible. I have no idea.
But still, 50-year mortgage, they're going to be paying the interest rates mostly. And that's kind of downside. But again, you're right. They still kind of own the home, but eventually they're going to be start paying the actual mortgage, the building equity. By the beginning, all what they'll be paying is interest rate. For the other one, I did work on a couple of those assumable loans, mostly the VAs, right?
Yes.
And it was lengthy process. It didn't finish that fast.
No.
The shortest one I had was around 2 months, but mostly take 9 days, 3 months. Yeah.
So, you know, that VA loan, we cannot roll it over. First, you have to pay it off on paper. Then the other VA person has to. So it's like two mortgages. The seller is paying off, but it will be continuing the new. So it's a double thing. So if the loan is closing in 35, 40 days, then you can just multiply twice. But at least they are getting better rates. But that I don't know how it's possible that the people were selling their 3% and buying the new house with 3%.
That sounds really same as some of the loans, because the idea was like, let's say I'm selling my home that I have I'm moving from the home that I have a 3% interest rate at Louisa County, that one that I just sold, and I want to buy $1 million home at 3% interest rate in Vienna. I'm also struggling to see how the numbers will work unless the government pushes the money in and helps out.
Government have to subsidize it, because who is paying? The lender financial company, they're not taking loss. So the government has subsidized. I don't know how much they have. It's the trillions of dollars of debt already. So I don't know.
We will see what happens. I mean, they're just throwing the numbers.
Yeah.
Thank you for today. Hopefully that we're right about the 2008 crisis. It will not happen again, and we will keep making money.
No, it will not happen. It's just a number that you just see the differences in the things, that it's not 100%. Even whoever is getting like a VA, veterans are getting 100% loan, but it's guaranteed by the VA authorities. Normal person like you and I, they're not getting 100% loans. And whoever is outbidding or just putting more money, they're putting out of the market. So lenders are not losing that much. The market crashes when there's a difference. Every house, you must have researched that how much equity that an average person is sitting on their houses. So it's a huge equity in there. The most important problem at that time is there was no equity. There was even negative equity. But now we have so much equity. So they're totally different markets.
Correct. And I think now even the appraisals are being a little bit more careful. I'm seeing a lot of people complaining how they underappraised their home. And it's happening a lot of lately. I don't know if appraisals, they got some memo from whoever, but they're appraising.
Yeah, they're very strict. Yeah. And I think it's a good thing. It saved everybody, us, taxpayers, because we are taking all these losses at the end.
Okay. Thank you, Asma, so much.
Thank you for giving me the opportunity.